Number 12?
Number 12, we're back.
What a long and arduous journey it's been to get to number 12.
It hasn't been too bad.
It's been pretty easy.
It's been pretty easy.
It's been pretty easy. How was your week?
Excellent. No complaints.
Good week?
Oh, good week. Excellent week.
It's good. How do you like the new videos?
I enjoy them quite thoroughly.
Yeah, I thought
the more entertaining, the more value that we bring besides just the news.
Yeah, I think this consolidates the news a little better and helps. I think that the majority of people that might end up watching any of that kind of stuff, I think we're going to find is probably 80%. I don't want to say layman, but people at the very early stages of investing. Maybe they've invested a little bit.
Right, yeah.
It's not people that are... The news isn't something they're trying to consume on a mass level.
Yeah.
So I think it's probably easier we consolidate the news this way and then give the mass audience a much better foothold to get started.
For sure, more of an educational kind of videos, right?
And take the reins off a little bit.
Right, yeah.
Allow me to, I mean, the fact is, if you want to be broke, don't do what I say. Do the opposite.
Yes.
Go ahead and keep doing what everybody does that's not working. And don't do this, because this will hurt you.
Yeah,
this will wreck the whole plan, because you'll end up actually prosperous.
Oh, for sure. Nobody wants that.
You don't want to do any of this kind of stuff, because with more money comes more responsibility. It's like Superman.
For sure,
it's the more responsibility issue, right? It's not for everybody.
No, it's not. No.
So we'll put the news into here in number 12 and going forward.
Number 12 and forward,
and it's a lot of news today. And with the videos, we'll keep giving people a little more realism about their finances. And how if they really want to, if they're not delusional enough to think that $1 million overnight idea is what's going to solve their problems, or that they're waiting for the perfect opportunity to show up at their door, that putting in the work over time, learning the principles and executing those principles by habit is going to end up ultimately what takes them to the next step from their peer group.
Oh, for sure, yeah.
You're going to have people paid the same amount of money as you, but there's going to be people who figure things out easier. And I know a lot of people want to live for today. They don't want to worry about 20 years from now, and that's fine, but that's just not my mindset. You know, I expect a fairly long life horizon in front of me unless the squat rack collapses on my head. God forbid.
God forbid. Or fuselage.
Yeah. Fuselage from the sky is always a possibility, even though our airlines they're pretty good here.
They're pretty good here.
Yes. Yeah, I know what's his name? Lil Pump guy, the Gucci gang guy. He doesn't like WestJet, but I have no problems with WestJet. No problem.
I've flown WestJet a few times. I had no problems.
No problems with WestJet.
No, not at all.
I'm Cody from Wall Street Breakdown.
I'm Anthony from Wall Street Breakdown.
This is podcast number 12, and this is where you're going to find the news.
The news.
This is the news from last week in the stock market from everywhere, all around the world. I looked under every rock.
Oh, you did this time? Nice.
I did it all.
I was quite the Indiana Jones adventure. Huh?
Absolutely.
Nice.
There was only one way to track down all this news. I was inside every conch shell and everything. There was nobody hiding anything out there.
Oh, that must have been fascinating.
It was delicious.
It was delicious. All right, well, let's start with the markets.
Let's start with the market. The TSX had a bit of a bumpy week. So, I mean, there's some NAFTA talks going on and stuff, and I mean, we'll get to that a little bit later, but the TSX wasn't really able to get their wheels under them up here in Canada. Canopy had about a 5% pullback. It was a bumpy week for Canopy. They shot up pretty good, but they ended up closing lower than they were to start the week. They're tough week for Magna, auto parts distributor. It was just one of those weeks up here where we've got too much outside influence that's affecting our markets at the moment. And we're not having enough direct influence. And when you look at it, the Canopy pulled down the healthcare sector so significantly. Like it was like a 25% decrease in the healthcare sector in Canada, or Canopy makes up 25% of the healthcare sector just because of their market cap, and they pulled it down. But then when you look at it, the healthcare sector in Canada, in the TSX Composite, only makes up 1%, which just goes to show how little diversification we have up here when like a whole industry sector, healthcare in Canada, makes up 1% of the composite. Like that we're just so undiversified still that while we're doing well employment-wise, obviously our banks are doing well, oil's picking up, we're not too sure how that's going to end up affecting a lot of things down the line for oil producers here in Canada. I would imagine a lot of the people that have the infrastructure built in are going to get a lot of help if things are going to pick up, but as far as Canada as a whole, we need to start doing better, building more industry. I mean, I'm going to harp on that. It doesn't matter how good our economy is doing. We need to do more to further our economy on a much more international scale. For such an international country, we do not have any international impact brands. Not a one.
No,
of them.
none.
Not
No.
a one of them.
No.
I don't care Roots or Canadian Tire.
That's slacking.
It's
Yeah,
not a
no.
one of them. So the Dow Jones, S&P, the Nasdaq, everybody breaking records again. It's one of those. It's one of those times. It's the time of your life. If you're investing in the market, I think the S&P is on the longest streak right now without a 5% pullback ever. Dow Jones record close, S&P record close, Nasdaq record close to end the week. Just
Been like that for a while now.
humming along. Everything is just humming along just fine. Inside the market, we got MBA Mortgage Apps. They were 8.3% versus negative 2.8 last week. So the holidays might have took off some people buying houses. But
for sure.
mortgages are still ripping along. A purchase index up 5% versus 1% last week. Refinance up 11% versus down 7% last week. And the 30-year rate found a way to drop to 4.23 versus 4.25 last week. It's cheaper to own a house right now, and they're slanging them.
Yeah,
They are
slanging them.
They are pushing these mortgages out the door, and it's tough to see why you wouldn't.
Right. Yeah.
Right.
For sure.
As long as the lenders validate that the earnings of the people taking these loans can do it, so we don't have ourselves another mortgage crisis.
Yeah.
And I mean, that was really all subprime mortgages bundled into a bunch of stuff rated the wrong way. But I mean, as long as we don't get everybody out on the hook, and it's just really good economy picking up and people able to afford this, I think we're in good shape with this. National Retail Federation came out with their U.S. retail holiday sales for 2017. It was up 5.5% to $692 billion in spending.
Wow.
692. And the estimate was for 3.6% to 4%. So it blew past estimates too, right? And I mean, we've had strong holiday sales for years in a row. Online and non-store sales were up 11.5%. They make up about 20% of the sales market in total. Some of the actual sectors that did really well, building materials and supply stores up 8.1%. That was just a lot of fat ants came over and they broke toilets, and people were repairing toilets, or dad bought 2 drills or whatever it was. Furniture and home furnishings, again, fat ant broke your couch, 7.5%. Electronics and appliances, because she ate the microwave, 6.7%. And surprisingly, sporting goods. I skipped a bunch of categories in there that were kind of in the meat of things, but sporting goods down 0.5%.
Oh, really?
Yeah, that's kind of a shock, right? Like I don't know, man. Money goes around so well when money goes around in an economy. People start spending more money on things like their kids, what their kids like to do. Is this just saying like kids are slowly starting to
just play video games,
gravitate out of sports, or for some reason, just this time around, the economy is not entertaining that as a marketplace to spend the dough,
right?
Spend the extra dough. Clearly, they're spending on building materials. I'm sure Home Depot and Lowe's like to see those numbers.
Oh, I'm sure they do.
Yeah, absolutely. In Europe, everything's going good. Unemployment fell to 8.7% in November. That's the lowest that the Eurozone's had for unemployment since January 2009. There's big discrepancies from country to country. Obviously, you're going to have that. Cyprus and stuff are still that 20% range. Spain's at like 16.5%, but Germany's like 3.5%. So, I mean, and Germany's obviously the economic leader over there in the Eurozone. So as long as you're the guys that are towing this rig anyways are the ones that are able to make this happen, I don't think anybody's too surprised that some of these other countries that have been having issues for over a decade, if not more, are still having problems. But the Eurozone as a whole is strong, and that's good to see. The Euro's actually up this week pretty good as well. Over in Japan, things are moving along steadily like they've been moving along. The economy expands for the 7th straight quarter. That's the longest since the 90s. It's driven by strong exports out of Japan. Japan's been ripping along too. I mean, China's beating their GDP estimates now. So Canada, job vacancies rose to 468,000. So that's vacancies. That's the amount of jobs that are out there in the third quarter. That was up 15.1% year over year, with vacancies across all sectors rising. So not just at the retail services level, but in every job, everything that's going on up here. I mean, we've seen Canada's unemployment rate drop here substantially. The amount of full-time jobs that started in 2017. So I'm not surprised to see this, but there's no way anybody's going to be able to give me the excuse that they can't go out and find a job.
That's right.
You could definitely go out in this marketplace and find yourself a job. That is what's happening in the market, sir.
All right, let's talk about some of the big headlines this week in news.
How big of a headline do you want?
Let's start with oil.
Woo! I was going to talk about NAFTA, but we'll start with oil. Oil hit a 2.5-year high. Oil continues to rise. So we've had a lot of oil starts. Baker Hughes had the survey on, I think it was Thursday or Friday, had 15 rig starts. So some of those oil rigs, some of those nat gas rigs, but the numbers continue to rise. The oil price is rising just like the rig starts have rose all through 2017 and seem to continue to rise. A lot of people up here being put back to work in a lot of the stuff, the infrastructure that's already built. So it's really just a matter of all the things that are going to end up going on with OPEC. I mean, do we think that this is the top end price of oil? I think we talked about this like maybe 3 weeks ago. I don't see oil going to ridiculous $80 a barrel levels. Like, I know it reflects it at the pump here down the street now. You would think this was when oil was over 100, the way it's priced over there.
Right, for sure.
But I don't think oil's going to get up there again. I think oil is finding itself a nice, soft landing where it's supposed to belong. Mm-hmm. It was undervalued for too long. We have talked about this because I remember us talking about people thought the infrastructure for alternative fuels was going to be very easy to implement. This was going to be easy turnaround, no problem. And we were just going to have all of a sudden alternative fuels and oil was going to become passe. And it's just not that way. So oil continues to go up. Do I think that's the investment to make right now? Maybe, or you're asking in comparison to being inside the actual stock market? No. And when we're moving on to second things that shouldn't be an investment despite them going up is bonds. Right. Bonds are going up as well. They spiked over the week. I heard a bunch of analysts come out and babble nonsense about being in bonds and basically taking the air out of the market. Could this be a sign that, like, are people going to move over? Because, so the 2-year, the yield on the 2-year has moved higher than the S&P's dividend yield, right? So, and that's the first time that's happened since like the financial crisis. But the problem is the S&P was up like 20% last year. So, you'd have to be assuming a drop off. Or you'd have to be assuming an absolute cratering where it's making no money over and above that to justify being in that bond, unless you're just in love with bond. Like, that's a part of your diversification strategy.
Bonds.
Yeah, you're just in that because that's the 10% fixed income, easy 2-year that you're just in it because you're diversified enough that you can be safe. Which, I mean, is great. I'm not saying that bonds have no use, but the idea to get out of equities and to get into bonds right now, regardless, I think the 10-year is up to 2.6%. The 2-year's climbing. The 2-year's climbing because they know the Fed's going to raise the rates again. Right. So the 2-year's climbing on that. But let's face facts. The idea about being in bonds, some of these guys that came out and talked about it, it's like they've had nothing else to talk about, these bond guys, for years now. Right. And so when they actually finally got on TV this week, like, why are the bond prices going up? They're like, because it's bond buying season. You got to get all the bonds now. And it's like, do you really? Like, equities are roaring along. Like, good stuff for the bonds. It's nice. You're going to own some bonds. That's going to end up happening. So it's nice that your yields are going up, but to make any kind of comparison as to what people should be invested in the majority of their portfolios, bonds go up, it makes the news, but it doesn't it doesn't change the way I would have any investing strategy, especially not at this moment. Right. Not at this moment. Not saying if you couldn't change, but at this given moment here on Sunday, I'm fine with bond yields going up, but I'm not getting all hot and heavy over it. So the TSX, we talked about this earlier. It's having a tough time on Trump leaving NAFTA. If Trump decides to leave NAFTA or postpone NAFTA, there's just going to be a lot of blowback for Canada. Canada's probably going to suffer a lot more. Mexico's going to suffer the most, but Canada is going to suffer a lot more than the United States does. The United States cuts a lot of breaks to a lot of countries to keep everything on the up and up. And they're trying to bring a lot of stuff back home, and I'm not entirely sure if the Trump administration and Trudeau's administration get along very well.
I don't think so.
And Trudeau seems to stir the pot a lot and doesn't have a leg to stand on or a pot to whatever. You know what I mean. Yeah. And so I just don't think I could see Trump dragging this out and holding off re-signing an NAFTA agreement until there's some amendments made, and that's making the TSX really shaky because we are very, very dependent on our brothers to the south.
We are.
And the amount of money the cut we get because of contracts signed. So we'll have to see how NAFTA plays out, because as the markets around the world continue to roar, and Canada was roaring, now that NAFTA is the big talk, now that NAFTA is the thing that seems to be drawing people's attention, it's hurting our marketplace. So it is what it is.
Yeah. Let's go into a little bit about global bonds.
I talked about bonds. What do you read? What kind of index are you reading?
Sorry, no.
This
Apple.
is my host, ladies and
My
gentlemen.
bad.
My
host,
the cusser. The guy.
Apple.
Yeah.
Apple.
Now you wanted to. You should want to talk about oranges. Talk about bonds. I told you about bonds.
I know.
Who are you listening to here?
Let's talk about grapes instead of apples.
You don't really like bonds. That's what it is. You just checked out. You're like, global bonds. I ain't hearing this. So Apple, there's a couple stories out there. UBS is saying that Apple could repurchase about 120 billion of their own shares by 2019. Again, rumors, stuff going on.
Yeah.
Like analysts are always making assumptions, but Apple is expected to repatriate, 250 billion of outstanding international money, repatriate that at 15%. So 15% is not going to take a whole lot off of there. Right, so Apple's going to bring in a lot of money, already sitting really cash heavy. Got to do something.
Well, yeah.
They signed Oh no, that was Facebook. I was going to say they signed an agreement with Sony, but that was Facebook. They're just not a whole lot going on as far as mergers and acquisition talk from Apple.
Right.
Like they bought, was it Kazam or whatever?
Shazam
a couple of weeks ago or a month ago. There just isn't anything from Apple that's shaking anything up in the news.
Right, yeah.
But they've got so much money. They have so much money that something's going to happen. It's not just this, they've got a partnership with LG going forward with the new iPhones.
Mm-hmm.
Or, there's something. And I didn't see nothing. Apple at CES this week. They weren't there. Not that I saw. I saw presentations from.
Don't they usually do their own show or something? I think they do.
Whatever they do, they weren't out showing off. That's for sure. So
I don't think they need to really.
They got a lot of prestige behind that brand. I'd like to see them do more with the cash. Sure, it's great that they're buying back their own shares because it's a good idea for in-house. But do they need more money even if they could sell those shares at higher price? They don't.
They need something to change the market. Something that's revolutionary.
They need to be revolutionary again.
Yes.
Yeah.
They did it with the iPhone, the iPad.
Their smart speaker is going to do a lot of the same thing, I imagine, as the other smart speakers out there are going to do.
I can't see it really doing anything different.
I'm not here to tell you. I'm not here to tell you that Apple isn't more innovative than I am. They could blow my imagination out of the water. I don't see a lot of anything on the horizon. Maybe I'm thinking too narrow-minded. They're a pricey stock.
They are.
Yeah, it's a pricey company to own, and they're bringing back a lot of cash. They have so much money. I don't know if any company in the world, I doubt it, has more money on cash on hand than Apple does. And now to bring this back will just add more to it.
Definitely. Absolutely. Yeah, for sure. Let's talk a little bit about the CES.
Yeah, so the Consumer Electronics Show in Vegas. There was a lot of cool stuff. I saw a good presentation from Samsung. They had a really cool TV, the Wall, that was really nifty.
Yeah.
The Samsung guy looked like he was all business. There didn't look like there was a lot of goofing around in that presentation. Nvidia was a complete polar opposite. Buddy that was up there looked like he was having a heck of a good time wearing a leather jacket. He was showing off a lot of Nvidia's stuff, the new chips. He was making jokes about, if you buy in bulk, you get it for cheap. He was doing a good job. He showed a couple of laptops that are apparently, double the processing power, double the speed of a previous laptop that was the same size. They were just doing a lot of brag. He bragged about how he had, $5 billion worth of research and development chips in his back pocket because he kept pulling, all these different chips out and stuff. So he seemed like he was having a really good time. Nvidia is a strong company. They're in so much in this autonomous vehicle thing with GM. Nvidia is strong. They have moved into so many directions from just a simple video card maker or what once was at one point in time. That's pretty much what they were known for, and they are known for a lot now. And
a lot more, yeah.
I was really impressed with the Nvidia one. Intel's wasn't bad. They've got kind of this. The guy came out. It was fun. It's fun to watch. He did the half jog, and then you could tell he kind of pulled his hip and then slowed it down. And but they had some really cool interesting ideas, but a lot of the concepts for the Intel stuff is so deeply integrated into the cloud, and it was so far above my head that I understood what they were saying.
Yeah.
But I was like, I'm not going to do this any justice, like relaying this information like this. Yeah. The most intellectual, deep, new technology. Like, I get what you're saying, but I can look at like TVs and know a good TV when I see it.
Yeah.
I'm not going to be able to break down this new burgeoning technology you're showing me, but Intel's was really professional looking. It's again, strong company doing so much in so many different directions. They had like a helicopter, like a little personalized helicopter that you sit in.
Oh, really?
It was pretty dope.
Pretty cool.
It was pretty dope.
Pretty cool.
It was interesting. Alexa on board from Amazon. They said that they were going to do no internet connectivity for some of it, so you're going to be able to have it in your car, and it's not going to have the internet hooked up. So if you don't have the internet in your car already, Wi-Fi for some reason, so that's completely new. So Panasonic, I believe, is working on that for them. LG had a TV that came out of a box, like a floor box. It came up on your wall, like rolled up into this box. It came out. It was pretty nifty looking.
Oh, that's cool.
I'm not a TV guy, so I mean, it was whatever. But they had this smart assistant named Chloe.
Oh, yes.
That looked like a robot. It was nonsense. The one or two responses this robot did get out to the host guy before it crapped out were junk. Like LG has to be, they got to scrap this idea. Yeah. I then seen him on CNET from CES, like a thing I was watching from CNET that was doing, and they had Chloe on there, and she again died out, had nothing to say, like not very smart for a smart assistant. I think LG's probably missed the boat on that a little bit.
Yeah,
I think it's probably high time they decide to cut tail and run and decide to just do something else. Yeah, the TV thing looked great. The OLED stuff they're working on is fantastic stuff, right? Like LG does a lot of good stuff, and that may be a marketplace that's already passed them by a little bit. Seems like they got a lot of catching up to do. Oh yeah, because this was it was embarrassing.
It was a disaster.
It was embarrassing. I was embarrassed for them.
Okay, let's move right along to let's talk about Walmart.
Yeah, so Walmart announced that they're closing 63 Sam's Club stores. They own Sam's Clubs. 12 of those are going to be converted into e-commerce fulfillment centers. And then later on in the week, they announced that they're going to be cutting about 1,000 corporate jobs at the company's Arkansas headquarters. So Walmart is, closing a few Sam's Clubs, chopping a few heads on the block. They are... Yeah, Walmart's a tight run ship.
Oh, yeah.
You have to do this kind of stuff. Yeah. There's just checks and balances all the time. You take on responsibilities like Sam's Club, and if it doesn't all work out, I mean, you've got to close stuff down, change stuff. The 12 of them are going to e-commerce fulfillment facilities because Walmart's probably doing so much online business anyways. They're going to need these distribution warehouses. And then cutting 1,000 jobs, people aren't doing their job.
Obviously not. No.
Right? You're not doing a fantastic job losing your job.
No,
I'm telling you that for a fact.
Yeah, you're not going to be the best guy doing the employee of the month and lose your job.
Yeah, you're going to have to be in a department that's really, really not holding their own. And, that, there's a good job economy out there. So, unfortunately, take your severance from Walmart, from your headquarter job, and go find a new job.
Exactly.
Find yourself in the job line like everybody else. That's the 1,000 jobs at the corporate level. Must be a bunch of guys not doing their job. It's time to cut the fat off. That ends up being where a lot of companies end up building a lot of fat, is they have lots of guys at the top, but then they have way too many guys that take up middle management, and then you have all your soldiers on the ground. This is probably 1,000 people at a middle management just going like, we don't need you guys to just push papers around here at $75,000 a year. Yeah. So it's one of those things that just has to happen. So that's what it is for Walmart, man.
It is what it is. Okay, we got some news from the 3 biggest service providers in the United States.
No, that's a lie.
No,
that's a lie. There's no Verizon in there. This is 3 of the 4.
Oh, I guess so, yeah.
This is 3 of the 4, but Verizon's number 2.
3 of the biggest,
Look at, you're off base. Bonds here. All of the biggest service providers.
I said the 3 biggest service providers.
Verizon's number 2. I have no Verizon news. I'm sorry that Anthony has disappointed you.
I'm sorry, guys.
Verizon fans who are out there clamoring for Verizon news. I don't have any now. I come empty-handed. No news on Verizon. I could look some up. I could tell you fake news. I heard Verizon Verizon's going to the moon. I don't know. Take that for what it's worth.
Well, maybe the Sprint news will make up for the lack of Verizon.
Maybe. So Sprint's got 300,000 customers that got some wicked phone plans.
Whoa, really?
Like unbelievably wicked phone plans. 2 different phone plans, as a matter of fact, that are ending pretty shortly. So these promotions are ending. So one of them was from 2013, I want to say, 2014, and it was to match, I believe it was any other provider's plan and cut it by 50%. So it was a really short promotion, but not a promotion that goes into the like revolution where like once your promotion's over, it'll roll over and allow you to just keep that promotion.
Yeah.
And then there was another, man, I can't remember, but it was a share plan with like data unlimited or something. Again, something that's rolling over. It's about 300,000 customers in total on these 2 plans. And Sprint already has pretty fair churn rate. People leave Sprint. Sprint is not the strongest telecom company in the world. And the churn rate's obviously expected to increase off of that as 300,000 people. I believe January 31st is when Sprint's going to start calling these customers and letting them know that this plan's going to run out and it's not going to be renewed because it was a real much like the plan I just signed, which is with a phone company that'll be remain nameless. Even Rogers. It's actually a good plan. I normally complain about my phone plan, so Rogers has worked some things out for me. But it's one of those plans. It was just too good to be true plan. Only available for a short period of time. You had to be doing something special, like wearing a green shirt and juggling blue balls and doing all sorts of stuff to get this plan, be the 19th caller. It was a whole big deal. And now these plans are running out, not renewable, so Sprint's going to get a little bit of churn. So I don't know, Verizon fans, do you like to hear about how Sprint's getting a little bit of churn? Maybe you'll get some of those customers. Maybe you'll get some of those. If you don't get them, I'm sure T-Mobile will. Because that's the next story, is T-Mobile up 1.9 million in total net subscribers in Q4. The churn was down 10 basis points to 1.18%, churn down, not up like over at Sprint. Full year net adds of 5.7 million. That's 5 million or more for 4 straight years. T-Mobile is, they're my favorite little phone company.
They're killing it.
They're killing it. They're number 4, right? They're number 4, and they're allowed, the FCC allows them some more aggressive advertising tactics.
Do they?
Than are allowed to the other phone companies.
Why is that?
For competition.
Just for competition.
They allow them, once their market share gets up to closer to where Sprint is, then they're gonna no-go it, which is probably another reason why maybe that Sprint T-Mobile thing never went through. Maybe Deutsche Telekom and SoftBank sat down and realized that regulators were just not gonna, they weren't going to allow all the good stuff Sprint has or that T-Mobile has already to carry on, and the deal might not be worth as much. Just a kind of a thought there, just a little, just an extra little morsel of knowledge potentially that could have took place. But T-Mobile always adding people, churn down, added net 5.7, like I said, over 5 million for the 4th straight year. T-Mobile is a very, very strongly growing 4th competitor in the telecom market in the United States. They're going to find a partner for a dance somewhere. I'm almost positive about that. This is one of those companies where I will not be surprised if some other major media company partners up with these guys, that one that doesn't infringe too much on telecom, much like we're seeing AT&T Time Warner, one that doesn't infringe too much on media. Unfortunately, AT&T Time Warner both in the media department. But if you can get somebody completely separate, you could make a pretty big conglomerate out of a T-Mobile and Comcast or T-Mobile.
I was going to see them like like an internet provider. There could be some serious merger and acquisition potentially in T-Mobile's future. I could see it. It's going to regulator heavy, obviously. Regulators get involved in all this kind of nonsense. But T-Mobile's a strong company. AT&T backed out of a deal to be the first American carrier to carry Huawei, which is the number 2 big device seller in the world. Samsung being number 1, Apple falling all the way to number 3. Huawei out of China, obviously, smartphone company. This would have been the first time in the United States anyone would have actually sold their phones. They're the number 2 selling phone in the world. But I've heard of them, but I've never ever seen one, I don't think.
Yeah, they make really nice phones, actually. The thing is that they're government backed. They've got a lot of government assistance on their side, right? Government's a hands-on sort of approach over in China.
They are,
they like to get their hands on it all. So
They've had a lot of help, and the United States government has made mention before in the past, not recently, but I'm not sure if they didn't maybe nudge mention to AT&T as they were closing this deal about these previous mentions, that they're concerned with the security of the phone and phones not necessarily having some sort of data breach workarounds that were implemented by the government that right. subsidizes that company. That's been mentioned before, and it's been mentioned by the U.S. government that potentially there are security risks right. for using these phones as far as, what kind of data might be being stolen that you're not knowledgeable is being given away. Because, I mean, it's a whole different market. Mm-hmm. It's a market where spying on your citizens, I'm not going to say isn't frowned upon, but might be more readily done. As much as I think the United States, people in the United States think they've got, the government breathing down their neck. I think in a country like China,
I think it's even worse.
And I think when they're involved with a company like this that makes things that are in your hand, that you're implementing all your, most crucial data into. Yeah. So it was mentioned before. And then for some reason, just on Monday, AT&T just pulled out of this deal. Because I thought this deal was going to get done. I thought it was like, this is going to be nifty. We're going to get a chance to see some new phones over here in the Western Hemisphere. Stuff that you could only get if you bought it online and shipped it over here, right? Like you couldn't actually get a hold of it otherwise. There's no dealer up here in Canada holding one either.
That's probably why I've never seen one.
Yeah, exactly. So I thought that would have been pretty interesting. But AT&T, I guess, got shook some way or another. The man came a knocking and was like, you want that Time Warner deal done? Maybe don't make deals over in China.
No.
Maybe that's what happened. Or maybe it was a Verizon story.
Yeah, that could be a big breach of security.
Sorry, I have no Verizon story.
No Verizon.
Nothing.
No, that's my bad. But let's move right along here so I'm not in the spotlight anymore. Let's move on to Boeing. Any good news from them this week?
Well, so Boeing changed their name to Verizon. No, Boeing delivered 763 planes in 2017. Oh, wow. That is a record.
That's impressive.
It beat the record by one, but it is a record.
That is a record.
And it's because Boeing had a monstrous 2017. They were on top of the Dow 30, just running amok. It was a lights out year. There is few years you'll see from a blue chip company that just go off like that. And Boeing had just went off in 2017. 5,864 in the backlog. Yeah. That's 7 years worth of planes.
That's quite a bit.
And people still putting in big, hefty orders. Yeah. So there's a backlog of 7 years that aren't going to be built, and people they want business out of Boeing.
Boeing has that name everybody wants.
And the quality.
Boeing.
And the quality. Like just the absolute, there is just no question that it's the number one in that space, in aerospace. That it is the number one. Airbus last week mentioned that they had 703 planes delivered in 2017, and that was a record for them. So Boeing 763, they announced that this week. 703 by Airbus announced last week, both breaking records. When I was writing these down, my thoughts traveled a little bit to the wording behind the fact that Boeing delivered 763 planes. They delivered them. So I understand that. The plane gets delivered to the destination point.
Yes.
Kudos to them. But later on, when we're going to talk about housing, we're going to talk about some earnings from some builders. When houses are purchased and people move into them, they're called delivered as well.
Why is that?
I'm not sure. Like you deliver them the keys. It just seems like there would be different with Wall Street's love for jargon and terminology. You think they wouldn't just be brandishing the word delivered all over the place, just using it so liberally?
I delivered your fence today.
Yeah, so they deliver the plane. That I get. It flies to wherever it's going, or on a barge, or whatever it happens to be.
But house is in the ground.
Tom Cruise comes in flying real low in his sweet new Dreamliner. But when it's a house, it's already there. It's already there.
It's not being moved.
No, they're not delering it to you. Like, here's your new house. Like,
that's very true. I wonder why they say that.
Bro, I'm at work. What am I supposed to do with this house?
Oh, that's a good one. Let's talk about Moviepass.
Yeah.
Helios and Matheson, 1.5 million subs for Moviepass. They're talking about doing a potential ICO blockchain nonsense. That was it. That was the story.
That was it?
That was the story. I seen that in there. They were up a bit, down a bit. It was Helios and Matheson. It's blockchain talk. There was no major moves in the cryptocurrency markets this week. So like
surprising.
Bitcoin, it was pretty stabilized. Nothing jumped around or dropped off the map too much.
Cryptocurrency was stabilized.
I mean, as stable as a mental patient can get.
There
right?
we go.
This was bipolar stable. They're just hovering on being okay. But I mention this only because we had a little bit of other cryptocurrency news throughout the week. Kodak.
They're still around?
Kodak is still around.
Wow.
I think most people think that, to be honest with you. Yeah. Kodak is a sub $5 stock. Normally, they are, for everybody not born before 2000, they used to make a camera.
It's called film, too.
They used to use film. You'd get it developed.
Yeah.
Yeah, you would go places with real film and get it developed. Yeah, Kodak made cameras.
They did.
And they've now started a blockchain cryptocurrency initial crypto offering for a photo sharing service so that you can put your photos up. Apparently, it's a fairly big business, is actual professional photographers taking photos and selling those photos, selling the rights to use those photos. So this actually is a photo sharing service in a blockchain cryptocurrency form that you get to upload your photos and then have people pay you in, I would imagine, Kodak dollars. And
K-Bucks.
Yeah, K-Bucks. So they were up 119% in the one day, and it was it cooled off near the end of the week because nonsense.
That sounds crazy to me.
But yeah, anything that gets blockchain put onto it, Riot blockchain, Long Island iced tea blockchain, in the last couple of weeks, right? Everything that gets blockchain added to it does a crazy run. So I don't know, if you're like a company going bankrupt here pretty quick, you know, like Best Buy Blockchain or GNC Blockchain. You can bring companies out of from the dead. Blockbuster Blockchain. You'll have video stores back up and running here in no time. But Warren Buffett came out later this week and said he'd buy a 5-year put on every cryptocurrency. That's a quote. I would buy a 5-year put on every cryptocurrency, basically saying that 5 years from now, he sees every cryptocurrency being worth less than it's worth now at least. That's at least what he's saying. Yeah. At least what he's saying. So while Kodak tries to stave off being torn into the volcano of business and revive themselves through blockchain photo sharing, and Moviepass starts a blockchain technology nonsense, Warren Buffett, the most cool, calm, collected investor of all time, comes out and reminds us that nonsense.
He's been investing since he was like 11 years old. I think I would listen to him.
I think I would listen to Warren Buffett.
Me too.
Well. Yeah, me too. Just a bunch of nonsense.
Moving right along, let's talk about Dropbox.
Yeah, we talked about this on 10.5. Do you remember 10.5?
We did. I do.
Woo, that sounds like a radio station we were running.
It does, yeah.
Wall Street Breakdown 10.5 on your AM dial. We talked about, we're not cool enough for FM, right?
No,
we're way more AM gold,
yeah.
right? I'm much more AM than FM. Dropbox, we talked about their IPO. IPO underwriters are going to be Goldman and JP Morgan. The last time they had a round of funding was in 2014, and the valuation of the company at that time was $10 billion. That was 2014. You can only imagine what that valuation would be at now.
Yep.
They filed this confidentially, so we're going to find out when the prospectus comes out after JP Morgan and Goldman are done underwriting it, what exactly they're expecting to make off this Dropbox IPO. Dropbox file sharing service, much similar to like Google Drive and stuff like that.
Some sort of cloud-based.
Yeah, total cloud-based file sharing.
Yeah.
Not file sharing like peer-to-peer, but same file sharing I give to you on that kind of stuff. Good, strong company. People seem to like it. We've been waiting for this IPO. We knew this was going to happen. This is one of those companies that people have been waiting for. As long as it doesn't go in overpriced, I expect this IPO to be pretty strong. I mean, as long as they don't overprice it way out of the ballpark, I would imagine Dropbox IPO comes out and probably goes up on the first day.
They'll probably do.
As long as they don't go crazy. Don't go crazy with pricing it, and we should have a fine in this marketplace with a company
that's being this watched, much like a Spotify, or there's a couple of other companies out there where people are just waiting for the IPOs. So this is one of them. This IPO has been in talks for a while now.
Does Samsung have anything up their sleeves from the show?
Up their sleeves. Actually, this isn't from CES. This is going to go on later on. The one is just rumor. So it comes out of Korea. The rumor is that there's going to be the foldable smartphone coming. Okay. And we've heard Samsung talk about they've got the ability to, meld the display to make it move around. It's pliable. Right. So we've heard that, but we've also heard that they've been having a little bit of implementation issues. So it's not been something that's been going as smoothly as they hoped. So this Samsung's foldable smartphone is going to fold into a 7.3-inch tablet. The final product's expected for delivery calendar year 2019. So sometime early 2019 is what we're hearing. But again, this is all rumors. It's going to be priced for the ultra premium market. So you can expect it to be fairly expensive. Expensive into what relative value, I'm not sure. As expensive as a tablet and a phone put together. Yeah. Are we looking at like a $2,000 price tag?
It's probably $1,100 and up, I'm guessing.
Yeah, probably. I would imagine so, right? Yeah. So, but again, we're looking at a few years down the road and a lot of things can change. But the S9, the new phone that's definitely coming is going to be announced, we imagine, and probably shown off at the Mobile World Congress next month in February. It's a potential March launch date, so we're going to get a look at this relatively soon. All Samsung devices are soon going to have Bixby 2.0, which is going to launch later this year. So Bixby, obviously the smart assistant over at Samsung, working much better than LG's smart assistant that is probably still comatose on a CES display case somewhere, trying to get its faculties about it when Dave asked what he had booked in for today, and the machine just melted down and smoked. And
oh wow!
It was a gong show. That. Yeah, no, it doesn't. It just powers down, but it's so funny to watch something on such a prestigious display. Here you go. We're showing this off. Take a look. And LG's been working on this for a couple of years, and it went bust. So Bixby working a little bit differently, but Bixby isn't like a physical robot person. No. Bixby's just the actual AI inside the device. So. Yeah, Bixby is Skynet.
Bixby is Skynet. Let's move right along to Google.
Yeah, Google acquired a speaker company called Redux late last year. There is no word on how much they paid for this company. It's not a huge company. They've got 178 patents to their company's name right now, so that's all going to go into the Google coffers. But the reason that it's interesting to me when I seen it was, and I talked to my wife about this. I actually walked out and I asked my wife, I said, have you heard about these Samsung phones that are going to be, pliable screens and stuff like that? They're going to bend. No, she hadn't. I mentioned that Apple's working on a similar thing with LG. And I said, Google bought this company, Redux, apparently last year. And this company has a way of turning the display into the speaker. So they lay some sort of conduits that put out sound in the display, which takes out the need to actually have a speaker in the phone, which opens up significant amount of space for processors, RAM, for graphics, like a graphics component. So it opens up a serious amount of space inside of a phone if you can move the speaker to inside the display somehow. I'm still trying to, in my mind, picture how that works.
Sorcery.
But yeah, for sure. It's some sort of witchcraft, right?
For sure.
If somebody sold their soul to someone.
Oh, definitely.
And then Google bought it, which is smart of them, right?
They sold it to Google.
Why not? Yeah. Exactly. So they probably sold their soul to Google to get the technology. Then when they refined it, Google just traded them their soul back.
No, that's good.
Half their soul. Got to make a premium on that.
That's crazy. A speaker with inside the screen.
Yeah. I mean, obviously, there's no pictures. There's no working product.
This is just say so.
They just purchased this company. That's out there in the patents. They purchased this company. Still no prices come out. But a really interesting story.
That's very interesting.
As far as what the future could hold.
Definitely.
As we start to refine down how small the components already are, Yeah. In the Nvidia CES presentation, they were really showing off and comparing the size and power of the chips in comparison to the actual what they used to be in size.
Oh, for sure.
Yeah, so I mean, it's only getting better. So more space means devices don't have to get larger, but they're going to get a lot more intricate. How do you fix a screen you break if your screen also has your speakers in it? I mean, that's pretty proprietary.
Oh yeah. That's going to be pricey too, I can imagine.
Yeah, but interesting to see how it plays out.
Very interesting. So we got one last story for our headlines category here. Let's talk a little bit about IBM.
Actually, we have two more stories.
We do.
Yeah. IBM filed 9,043 patents with the U.S. government last year. That's 100,000 total patents for IBM. From 1993 to 2017, IBM is a company in a million different businesses. I'm not surprised that they lead in patents filed. The other top 10 were Canon, Intel, Samsung, LG, Qualcomm, Google, Microsoft, and I believe Taiwan Semiconductor might have been the other one. Lots of patents filed. Patents. We're wrapping up the year, so we're getting all these final figures from 2017. Yep. What are any of these patents for? A lot of them were for cloud computing on IBM's side, but to be honest with you, they could be for nothing. Just a bunch of patents. You came up with a funny idea. Yeah. It seemed like it would work, and you just want to own it in case somebody ever tries to use something similar to that.
Right.
Then you can sue them. Right? So these are all just litigation hedges, basically, for a company like IBM, filing close to 10,000 patents in a year.
That's a lot.
Man, your research and development department.
What are you making up? Just like anything?
Yeah, pretty much. Just down there working with Legos.
There you go.
Basically doing what my kids are doing. Okay, one last story. Do you have one last story? Or do I
do. It was for the CDC, isn't it?
Yeah, the Center for Disease Control has come out today and said that this is the worst flu in the last 13 years. There has been a lot of flus, 20+% increase in emergency room visits in the last week. There's been some deaths from the flu, children, the elderly. If people are sick, if they're sick around you, if they're sick at your school, if you're sick in the head, stay in the house. Stay away from people, quarantine yourself. You could turn into a zombie.
That's how I treat everybody that is sick with the flu, is like a zombie.
Yeah, you have to, because nobody wants the flu, because the flu is horrible.
Oh, no.
Yeah, so nobody wants the flu. People are sick. They're the sickest they've been in 13 years. You're sick. Stay away.
Let's stay away.
Protect your neck.
Protect your neck. All right, we got some earning calls coming up here.
Earnings calls. Are we going to get a call? Should I turn my phone on? Because I have the ringer off.
I think you already got the calls.
Yeah? Oh, geez, I've got the call. I remember Jamie Dimon from JP Morgan calling me.
I think your first
Lloyd
call.
Blankfein from Goldman called me too.
Oh, really?
Like, Cody, this is what the call is. I was like, thanks for the call, fellas. You're doing a good job over there.
Well, you got a call from Lennar.
It's fancy sounding.
Fancy.
Home builder Lennar. Lennar's earnings of $1.29 missed the street estimate by 19 cents. $3.78 billion in revenues beat the street, though, by $210 million, and that revenue number is up 11.8% year over year. Why, pray tell, did they miss by 19 cents on that EPS number, you ask? Anthony, why?
Why they miss?
Why did they miss? It's a delayed transaction from Q4 to next year for new tax reform benefits skewed the EPS number, so they are holding off or deferring on closing a deal from Q4 to push it forward to Q1 of 2018. So that'll be in the next earnings call to get some tax benefits.
Right.
Because they do all their business in the U.S., so they're a company that's going to receive quite a bit of tax reform.
Oh, for sure.
So they're going to get a bunch of kickbacks. So if you can, why not take advantage of the system a little bit?
Why not?
Doesn't make the EPS number look that great, but it didn't hurt them as far as the stock price this week. They were up on the week, closing the week out at $69.26. In that earnings call, they had 8,633 Q4 home deliveries. That's where they were dropping the homes right off.
You think they'd drop them off by helicopter?
I would imagine it was some sort of Sharknado that was chucking out brand new homes.
Nice.
Plus 5% year over year on the home deliveries. 7,357 Q4 new orders. That's up 12% on the units and up 18% in dollar value. So the dollar value of the homes for Lennar are increasing increasing as well. And we see that in the backlogs, 8,935 Q4 backlogs. That's up 17% in the units and up 23% in dollar value, which means the price of housing continues to go up, but it's getting cheaper. We've seen that in the MBA mortgage applications earlier. Yeah. It's getting cheaper to actually finance a house right now. 4.23%, I believe I said it was, down from 4.25.
I believe you did, yeah.
Not bad, not bad. In an economy like this, Lennar has a 20.25 price to earnings, a 2.15 price to book, and $16.3 billion in market cap. Their gross margin on home sales of 22.4% was down a little bit, unfortunately, versus last year's 23.3% in the same quarter. That didn't hurt their share price, like I was saying. They still found a way to go up this week. Housing is strong in the U.S.
Oh, yeah.
We're expecting good housing from not only these guys, but Pulte Group, and going forward, we're going to see good housing.
Oh, we are.
We know that. Builders are doing well. Home Depot, Lowe's are doing well. Mm-hmm. There's a lot of upside still in housing as long as the market stays strong like it is. If the market peters out, if we see a tapering of where things are going, we're going to see housing completely dry up. It's going to plateau. But if things keep growing at this rate, housing's going to keep growing at this rate.
We have another earnings call from KB Home. Another
home builders. It's much smaller than Lennar. 84 cents, beat the street by 7. It was only 40-cent EPS this year last time. So, I mean, EPS number up over double.
Yeah.
40 cents last year this quarter, 84 cents this quarter. So
good for them.
Pushing money. Right, that's how you make money. $1.4 billion in revenues this quarter, beat the street by $40 million, and that number is up 17.6% year over year. So, yeah, EPS up heavy duty, up double from year over year, and 17.6% in revenue growth. Doing a fine job at KB Home.
Fine job.
3,340 homes delivered again. Oh. Good job delivering homes.
Good job.
I'm not sure how they deliver them.
No, probably not by Sharknado.
Like maybe the Dumbo drop where they were dumping the elephant out with the parachutes.
That does make sense.
Yeah, Operation Dumbo drop. So maybe I would imagine housing parachutes. They're a smaller company. They got to cut back.
Exactly.
They can't afford Sharknado. That's a lot of CGI and it's a lot of cleanup.
Too much work.
How do you feed 500 sharks? You know, that's expensive.
That is expensive, yeah.
So homes delivered, that was up 9% year over year. The average selling price, $416.5 thousand, and that average selling price up 8% year over year. They closed the week at $36.98. That's up on the week. They had a pretty good jump off the earnings call, but then tapered back just a little bit. Price to earnings of 20.21, price to book of 1.73, and a market capitalization of $3.19 billion for KB Home. Much smaller than Lennar or Pulte Group, but still great.
Pretty good.
In an economy like that, it's tough to be doing bad. You have to actually be really bad at business. A lot of these companies, pretty strong businessmen running them.
How did Delta Airlines do for their earnings?
Okay. 96-cent EPS. That beat the street by 7 cents. $10.25 billion. That beat the street by $90 million. Now that revenue number is up 8.4%. They had a $60 million impact from Atlanta's Hatfield-Jackson Airport power outage and Winter Storm Benji, so that affected the EPS number a little bit. They got a $5.5 billion pre-tax income in 2017, which is not near as good as 2016's $6.12 billion. So they lost a bit of money in pre-tax income. So while the revenue number is up, the pre-tax income is not near up as much as it needs to be. In fact, it is down year over year. Delta Airlines had kind of a mixed year. Decent numbers. If they hedged fuel properly from a few years ago, they'd probably be in good shape. They've had a lot of stuff in the news, the Bombardier deal, the deal with Boeing. There's been a lot of stuff. Hopefully, and the closing of the airport there right around Christmas time. Yeah. There was a lot of issues for Delta Airlines. Passenger unit revenue was up 4% in the fourth quarter. Cargo revenue up 14.4% in the fourth quarter. Delta closed the week at $59.83. Price to earnings at 12. Price to book at 3. And a market cap of a huge $42.65 billion. They're a massive company, but there is not a lot of room for error in the airlines business.
No.
There is not a lot of margin. There just is not much money to be made. And when you have all the kind of factors that went into Delta's 2017 and are probably going to trickle into 2018, because I would imagine that Bombardier deal is going to get scrapped. They're not going to take delivery of those planes because they're not going to pay 292% tariffs on them. So we're going to see Delta still trying to find their footing a little bit, because I would imagine a deal like that takes a while to get together. You get a little rattled by the fact that you're not going to get it. And once this final verdict comes down, which I imagine will kind of mimic the same ones we've already heard, that the tariffs will stay in place, that Delta will be on the starting lines again of trying to find a new deal to bring in some mid-sized planes at a price that they can afford. Quarters like this, not bad, but not great. Right. Not great from Delta.
Let's move along to Blackrock.
Yeah, banks on Friday unloaded some earnings on us. Earnings from Blackrock, which is, BlackRock, major investment firm. All the funds out there are Blackrock, Spider ETFs at Blackrock, right? BlackRock is the investment firm. They got $4 trillion under management, $5 trillion.
Oh, wow.
Yeah, they're doing all right. $6.24 a share, beat the street by 22 cents. $3.47 billion in revenue, up $150 million. On the street, that's up 20.1% year over year. Their shares trading at $555 a share. I would imagine BlackRock's probably not making near the amount of money that they would like, just because the market's not trading as much as it normally would. And most of BlackRock's money is made off of trading, but they're in a lot of funds that charge people a lot of MERs. So there's a lot of people not moving around that are still paying a lot of those MERs.
Right.
BlackRock is doing well no matter how you slice it. Moving on to some regional to slightly mid-sized banking, PNC Financial came in at $2.29 a share, beat the street by 9 cents. I like PNC Bank. I'm always looking into PNC Bank. It's one of those banks I see making some big moves in the next couple of years. If they don't find another bank they're not hooked up with a bank in New York Mellon or M&T or somebody, they're going to do something big. They're always growing. Yeah. They're always growing. Their customer satisfaction is really high. It's just a strong financial institution for a retail bank. $4.26 billion in revenue. That beat the street by $80 million. That's up 10.1% year over year. PNC Financial shares closed the week at $151.84 a share. You'd probably hear more about PNC if the share price wasn't so high. Probably, if it was more tangible to buy into it, if they had more volume of shares out there, if they did a stock split and had more out there and actually brought that price down to something more retail investors could afford, that wasn't just packaged into a financials ETF or something, right, that you could actually buy the individual stock, I think more people would be invested in how good of a regional bank PNC actually is. Regional is a rough word to use with a company doing $4.26 billion in revs.
That's right, yeah.
Yeah. JP Morgan, $1.76 beat the street by 7 cents. I heard Jamie Dimon come out and kind of roll back his cryptocurrency talk a little bit from a couple months ago and say that maybe he didn't feel as harshly about cryptocurrencies as he was letting on. But that was, he also talked about inflows and loan inflows in the banks and how inflows are needed and how he sees the interest rate being raised next year by the Fed 3 times. So, but inflows is definitely what a lot of these banks are missing as far as loans go. $25.45 billion in revenues, beat the street by $300 million. That was up 4.6% year over year. That includes $2.4 billion in negative impact from the new tax bill. So they're getting hit up right now for that in Q4. So that probably took a decent chunk off the EPS number. $4.7 billion in Q4 buybacks at JP Morgan, and loan growth. Like I was saying, the inflows need to be up, but the loan growth was up slightly. JP Morgan closed the week at $112.67. And finally, the last bank on Friday before, and this is earnings season getting kicked off, bro. These banks, we're knocking through banks here. By the end of next week, banking is done. And that is the earnings season getting underway, and you know how this goes. And people were expecting bad bank numbers, and these bank numbers I thought ended up being just fine. Wells Fargo came in at $1.16 versus $1.54 estimate. That is way off the number. $22.1 billion in revenues, missed by $240 million, but that's up 2.4% year over year. Wells Fargo is going to take a $3.25 billion pre-tax legal charge right now, which is why you see that EPS number so skewed. Wells Fargo paying some hefty taxes. So just like we see it at JP Morgan paying $2.4 billion in back taxes, Wells Fargo paying some taxes and some legal fees on top of that, and getting a lot of that stuff out of the way as new tax reform comes into play. Debit purchases on the retail side were up. Retail banking deposits were up. Home lending fell $6 billion during the quarter. So ouch. Wells Fargo, big fall for home lending. Loan growth up slightly as well for Wells Fargo. Again, the inflows is what a lot of these banks need to see on the uptick. That is not something we're seeing enough of yet. A lot of the trading desks still doing very moderate business just because there just isn't a lot of moving around. Wells Fargo closed the week at $62.55 a share. You can expect a lot more financial earnings and a couple other earnings next week because, it's earnings season. We're back in the mix, bro.
We are. What do we have coming up for next week?
Next week, we've got a Bank of Canada rate decision, so we will find out how interest rates maybe go to 1.25% starting next week. Earnings on Tuesday, Citigroup, CSX, and United Health Group, so huge bank, huge health company. Alcoa on Wednesday, Bank of America, Goldman Sachs. So again, we are knocking it out. And Thursday, American Express, Morgan Stanley, and Canadian Pacific Railway. All that and a whole lot more to be expected in the stock market as we're back in business as 2018's in full swing now, my friend.
It is.
We only got to an hour.
I know. I thought there was going to be more than that.
Yeah.
I thought at least an hour and a half, maybe 2 hours.
I guess I'm not rambling on as much as I used to.
No, maybe not.
Yeah.
Are you?
I don't know. I did feel some sort of out-of-body experience when I was in a cornfield with a bunch of aliens last week.
So like a pod.
Yeah. There was a weird probing that took place.
Oh.
Yeah, let's not go any further into this.
That'd be another podcast.
I'll let my psychiatrist handle that.
Yeah.
That's it.
That is it.
So you did a good job despite the bond thing, and you didn't...
I had it in...
and you were really hoping on a Verizon story.
I was.
I'll try to come with a Verizon story next week.
I think Verizon needs to come with a story next week.
Verizon? What are you doing? How come all three major telecoms can come with a story and you're just flying under the radar? What's going on over at Verizon? Yeah. All that secrecy's got me wondering now.
Yeah.
That's it. Number 12 in the books. I'm Cody from Wall Street Breakdown.
I'm Anthony from Wall Street Breakdown.
That's right. Holler it out. Get it out of your system.
That's right.
The best way you're going to feel
I felt this was a really good podcast.
They're always really good,
They are. I know. There's just some magic in the air about this one.
It's my company.
I think it is.
It's totally my company. Thanks for joining us. We will see you next week. There'll be more videos. There'll be another podcast. Hopefully you'll be there. We love you. You're beautiful.
Love you guys.
Have yourselves an excellent rest of your week.